Europe markets rise despite global tech sell-off as chip stocks tumble. Hello everyone, and welcome back to the channel. European markets showed resilience on Friday, even as a major global sell-off in technology and semiconductor stocks spread across the world. Let's take a closer look at what happened. The Pan-European Stoxx 600 index initially opened lower but later recovered and moved into positive territory. London's FTSE 100 gained around 0.5%, France's CAC 40 rose 0.4%, while Germany's DAX remained mostly flat. However, the technology sector was under heavy pressure. The Stoxx 600 technology index fell nearly 2%, with major semiconductor companies leading the decline. German chipmaker Infineon Technologies dropped more than 6%, while Dutch semiconductor equipment giant ASML lost nearly 3%. The weakness in Europe followed a broader global sell-off that started in the United States and quickly spread to Asia. One of the main triggers was Broadcom's latest earnings report. Although the company continues to benefit from artificial intelligence demand, investors reacted cautiously, leading many traders to take profits in AI-related stocks. This caused a rotation away from high-growth technology companies and into more defensive sectors of the market. The impact was especially severe in South Korea, one of the world's most important semiconductor hubs. The Kospi index fell more than 4%, with Samsung Electronics dropping 4.3% and SK Hynix plunging over 7%. These declines reflected growing concerns that valuations in the AI and semiconductor sectors may have risen too quickly. Meanwhile, in the United States, market performance was mixed. The Dow Jones Industrial Average surged nearly 875 points, reaching a new all-time high and closing above 51,500 points for the first time. At the same time, the technology-heavy Nasdaq Composite slipped slightly, highlighting the ongoing shift away from major tech stocks. The broader S&P 500 still managed to post a modest gain. Back in Europe, Nokia shares also came under pressure, falling more than 6%. The decline came after several days of strong gains, as investors continued reducing exposure to technology-related stocks. Beyond the stock market, investors were also monitoring geopolitical developments. U.S. President Donald Trump said he would be honored to meet with Iran's Ayatollah Mojtaba Khamenei if it could help secure a deal. The comments come as the conflict between the United States and Iran enters its fourth month, despite a fragile ceasefire remaining in place. Market participants continue to watch these developments closely, as any changes in geopolitical tensions could influence energy prices and investor sentiment worldwide. So what does all of this mean for investors? The recent sell-off suggests that markets may be entering a period of consolidation after the massive rally in AI and semiconductor stocks. While long-term optimism surrounding artificial intelligence remains strong, investors appear to be reassessing valuations and shifting money into safer areas of the market. For now, European markets have managed to stay positive despite the pressure on technology stocks, but volatility could remain elevated in the days ahead. That's all for today's market update. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications for more global market news and investment updates. Thanks for watching, and we'll see you in the next video.